Let's do some top dead trades, shall we? Joining us now, our top players, Alan Knuckman, the Chief Market Strategist at BullseyeOption.com, and Phil Flynn, a Fox Business News contributor, ready to go for our trader game. Round number one, dive down. This is a rough market. What are you looking for that signals a stop to the slide?
Well, number one, we did make lows that we haven't breached again so far. So we'll keep an eye on that. But we had a big bounce, given most of it back. We need to stop giving back the gains, number one, and we need to stop being a sell the rally type market. Then we need to get back above the 4,100 level in the S&P, which is the bottom of this long-term range for the last year. That's a start, but the key is to get some follow-through buying when we do have these boom days.
It's crazy because, you look at the market, last week, and all of a sudden we're selling on extreme fear. Everybody's selling everything. It doesn't matter what it is. It could be energy stocks, even though the fundamentals for energy are probably more bullish than they've been in 25 years. It could be, you throw the baby out with the bathwater, but then you look at the technicals, and then all of a sudden we hit a technical area, and then the market bounces up real quick. I guess somebody declared the end of the recession at 11 o'clock. It's over. Let's start buying back in. I think you're going to see some extreme volatility. Right now, the odds of a recession are probably just over 50%, maybe 51%. I'm optimistic. I'm going with the 49%. I think we can avoid it, but it's going to be tough. We've had a lot of things thrown at this market, raising interest rates, the highest inflation since 1983. That's a challenge, but I think the economy can overcome it, but it's still going to be tough.
But more importantly, we know all this. These things are not a surprise. The market has made these adjustments. Let's see what happens next.
Round two, futures future. Stocks and bonds are down. So what does that mean for the future of commodities?
Commodities should be rocking, and they have been. I mean, we are seeing one of the most overdue commodity rallies we've seen in a long time. And I would even argue that we should have seen this rally years ago. I think it was so out of favor, for so many years, and everybody is focused on tech stocks, not realizing the underinvestment in the commodity space was going to create this incredible rally. I think a couple of years ago, I started talking about a super cycle in commodities. People laughed at me. It's like, what? Super cycle in commodities? You're out of your mind? But here we are, and it's because of underinvestment. So sometimes, when everything looks horrible, that's the time to start really looking at it. And people that started to, buy oil when it went below zero are the ones that are making a lot of money.
Bad enough to buy. That's a theory. But in commodities, it's pure supply and demand. So what we see is, they're worried about frost in Brazil. They're worried about, Ukraine wheat and so forth. So these things can always set up for price pop potential. That's the idea of commodities.
Round three, cash in hand. Fund managers have the biggest cash position since 2001. What does that mean for the markets if cash is king?
At some point, that money has to go somewhere. It's not often just going to sit in cash forever. Now, where it goes, that's anyone knows. But if at some point stocks become a much better value play with the PE ratio now below 17, down below 10-year lows, stocks are cheap. Now, the question is, will the big money go after it?
Well, money managers may not because they're scared, right? But one of the biggest money managers of all time, Warren Buffett, is buying everything. In fact, a lot of people were complaining like a year or two ago, Warren, why aren't you buying stocks? Why aren't you buying stocks? And, he says, listen, long term I'm bullish, but, the valuations are too high. Now the prices are coming down. Now, one of the big ones that he's been buying for a long time, it's on the commodity space, Occidental, Oxy. It's something we've talked about for a long time.
And I don't think the old man has lost it. So I know people have gone out there and said that, but he's still got his game.
Our game continues in the bonus round. Can you name the banker who did not get a multi-million-dollar payout after shareholders said no? Brian Moynihan of Bank of America, Jamie Dimon of Chase, or Jane Fraser of Citibank?
Citibank.
I think Jamie didn't get what he wanted, but I haven't been watching that news lately. I've been watching the markets.
Alan is our winner this week. Shareholders voted down a $52 million payout to Mr. Dimon.
No way. He deserves it. I don't care what anybody says. I think Jamie Dimon's one of the best CEOs in America. Shareholders revolt. I'm telling you.
But don't cry too hard for Jamie. His total compensation in 2021 was $84 million. Not a bad year. Go to businessfirstam.com for where to see our show on TV.